Welcome, everybody, to the Crane Connection. I am Sarah Snell Cook, your host, and I'm here today with Stacy Augustine. Welcome.
Good morning, Sarah.
And Stacy is the president of CU Strategic Planning, which is now a Callahan company. So why don't you do a little intros of yourself, and not that people don't know you, and the organization.
Great. CU Strategic Planning, like you said, we're a Callahan company partnering with Callahan, and we we're in the business of helping credit unions embrace their cooperative roots through CDFI certifications and grants and all the other good things that come with it.
Yeah, and so you must be busy these last week or two.
Yeah, we're always busy. It's been an interesting year. I knew
Mhm.
it would be going into this year, but yeah, it's like many different trades out there, it's a year of unexpected surprises from the current administration.
Even when you expected the unexpected, you know?
Yeah, yeah.
So explain the latest news on the CDFI fund, if for those who aren't aware yet.
Okay, so on Friday, May 2nd, we got the president's proposed budget, his so-called skinny budget. And that skinny budget reduces the CDFI, doesn't eliminate the CDFI fund through the appropriation, but it reduces it to just 90% of its funding, of its 90% of its 2025 funding level. So to just $33 million, saying that the money left over is to keep the CDFI fund running and to close out programs, reporting, that kind of a thing, saying that to the CDFI fund, the CDFI industry has matured beyond the need for seed money and should be financially self-sustaining at this point. But this is really consistent with what we've seen in the past, what we saw in the past during the prior Trump administration. Every year it was the same kind of language about how the CDFI fund had the CDFI certifications and grants are important, but the industry has already matured and doesn't need this grant money anymore. So what I think that there's a failure there to see is that this really isn't about the maturity of the industry. We have some really large, very mature CDFIs. It's a good investment from the administration where those CDFIs leverage those funds tenfold, at least tenfold, into their communities and make a huge difference. So, if you're getting a 10 time return on your investment, that's a pretty good investment.
Yeah, 1,000% ROI.
Mm.
Um, and so you disagree with
Yeah, well,
him?
yeah, that's a given. I
Yeah.
do disagree with that. He does mention that he'd like to retain the new market tax credit program and the bond guarantee program, but those aren't things that credit unions participate over much in. So it would eliminate a lot of the regular programs that credit unions participate
Right.
in.
And so what does that mean for the CDFIs that are already certified and maybe even applied for grants this year or for funding for this year?
I don't think it means a lot right now. Right now, we're fully appropriated for this year. So it shouldn't make any difference to anyone who's applied for a grant this year. Where it might make a difference is going into next year. This is a proposal for 2026. Now, I think what's really important to take away from this conversation, though, is that this is a proposal and this is really consistent with past proposals. But in all of the past proposals, we saw Congress continue to show bipartisan support for the program and to continue to fund it and then to actually increase the funding for the program during Trump's last stint
Hmm.
in office. So I think that we've seen really good bipartisan support for it.
Yeah. Yeah. And also the Treasury Secretary had mentioned that he is supportive of the CDFI fund as well.
Yeah.
And so you're from what you were saying, it sounds like this is more of the same. It's more of the
Yeah.
same Trump.
It's more of the same, but it has an interesting new twist to it that we haven't seen before because, in a private conversation a couple of weeks ago, we had heard that someone from within the administration say that President Trump actually liked CDFIs and saw them as part of his Main Street America program. So immediately I went out and looked like, well, what is this something I missed in his
Mhm.
proposals? So it really helps to shed some light on what he meant by that because his proposal, while it does cut a lot of the programs that are currently in place, it actually appropriates $100 million towards the creation of a new program called the Rural Financial Award Program. And the idea behind that is to shift the CDFI fund's focus from its current focus to providing affordable financing and spurring economic growth in rural America. So I think that's what he meant by Main Street America. So it's a shift of focus, but never before in his prior administration did we see him actually create a new grant program delivered through the CDFI fund.
And those rural areas it's so needed. There's so many banking
Mhm.
deserts out there just because it doesn't financially make sense to serve people who are 100 miles from your nearest branch. Um, I mean, can you give an example of some of your credit unions? Like I know we recently featured Fort Randall, for example,
That's a good one. Yeah,
for
that's a
every
great
rural area.
example.
Yeah.
Yeah.
And that is definitely needed. There's so many banking deserts out there. Like we recently focused on Fort Randall that's serving, you know, members across 6 counties where the population is less than that of most of the states. Credit unions are doing great work in rural areas that are often poverty stricken or, right at that borderline there. And we need to help them as well as the urban areas. Um, so what does this mean for credit unions that are looking to become certified in 2026 or 2025? I forget.
Well, that has to be seen to, we'll have to see, basically. I will say that the appropriation language in his proposal calls for retaining the certification authority of the CDFI funds. So clearly there's a support for that. Um, I do think that there were some things in the certification proposal that came out about 2 years ago that folks are, still winding their way through right now with a September deadline for most credit union CDFIs, most depositories. And, every administration comes to their office with their own policy objectives. And this proposal, I think, creates some greater clarity over what the Trump's priorities will be. And it takes a while for agencies, for that trickle down effect to happen and for that policy objectives to be incorporated in how each agency is run. I do think that we will probably see some effect from his policy objectives in the certification requirements. And there's some of the areas that credit unions have been concerned about, like overdraft protection. I think we could see changes to some of that. I think we've already seen a softening internally in how the CDFI fund is handling those.
Yeah, and there were a lot of new requirements um,
Sure.
that possibly could go away.
They
But
could,
you
yeah,
never know.
or they could just be softened. For example, it's very fair to ask about how a CDFI is administering these kind of policies because they could be predatory in an organization. They could be administered in a predatory way. Do I think credit unions are doing that? No, I don't think credit unions are doing that. So it gives us an opportunity to state our case. This is how we're administering it. It's in a way that benefits our members and so as long as they're letting us make the case for it and explain how the credit union is administering those policies and listening to the arguments, it should be fun.
Yeah. Well, that sounds all good then. What are you guys doing behind the scenes to help push or advocate for credit unions in the CDFI fund?
Yeah, we're trying to keep people up to date. We're trying to make sure that they know that this is a proposal. This is the proposal that comes out from the president every year. This is part of the budget making process, but it is a proposal, not it's Congress who makes the budget, and Congress has been very supportive of the CDFI fund in the past, and both Republicans and Democrats. And we saw that recently when the president put out his executive order asking various different organizations to show, are they doing things that are statutory or not? We saw the Treasury Secretary come back with a report saying, yeah, all the CDFI fund programs are statutory. They are all part of our enabling statutes, and a lot of great support from the Secretary of Treasury. So I hope that we will be able to continue just doing the good work we do.
And so, while we've been doing this interview, there was a news flash came across that CDFIs have, or the CDFI fund has halted applications for CDEs. Now, explain the difference of what that is.
Okay, CDE designation is different than a CDFI designation. Credit unions are familiar with the CDFI designation. A CDE is required if you have to become you have to have a community development entity designation, a CDE designation, to participate in some of the tax credit allocation under the new market tax credit program. So this is there's not that these are not the droids you're looking for. These are not this is not the CDFI certification, which is still so far on track to be required by the end of September for most depositories.
Well, I'm going to allow you the last word. What would you like to leave the credit union audience with, whether it's, advocating for CDFI applications or anything else for that matter?
Well, I think we're going to be watching this closely. There will be opportunities for credit unions to weigh in with their members of Congress, and I think that's important. We have a lot to advocate on these days, but please don't forget this important niche out there. I think CDFIs do tremendous things for their communities. They're all over the country, and they're serving low to moderate income people out there that wouldn't otherwise get served, which is just true to the credit union mission.
Absolutely. Thank you so much. Appreciate your time today, Stacy.